Global tech giant Meta Platforms, ticker META, recently reported its first quarter 2023 earnings, crushing estimates by 30.73%, sending investors into a frenzy. Now, the question on everyone's mind is Meta a buy? In 2022, the multi-billion-dollar company failed to meet revenue estimates, triggering a 73% drop in its stock value as investors began to lose faith in the company. This was the biggest price plunge in Meta's stock history. This was largely due to the company's massive investments in metaverse research through its Reality Labs division. When investors began to demand more profits and revenue, Meta was not able to deliver, resulting in its stock price crash. But it wasn't just the metaverse failure the company had to deal with. Meta was also experiencing financial difficulties and dealing with more competitors than ever before. Meta's biggest rivals, TikTok and Snapchat, was giving the company stiff competition, especially since TikTok's video-based service has rapidly captured the attention of millions of people. The drop in its stock price and all the struggles Meta was facing led to one of the largest layoffs the tech space has ever seen. Because Meta had grown so much following the pandemic, it expanded its workforce massively. But with drops in profitability, things had to change. Meta announced it had to cut costs and let go of 11,000 personnel, about 13% of its staff, with plans for future cuts to make up for the drop in revenue and rally its profitability. One disgruntled anonymous employee commented that Mark Zuckerberg will single-handedly kill the company with the metaverse. But it seems investors may have been carried away with the Meta sell-off last year. On April 26, Meta released its earnings for the first quarter of 2023. Meta smashed revenue expectations, beating its revenue estimate of $27.65 billion and $2.03 earnings per share, and reporting a revenue of $28.65 billion and $2.20 earnings per share. What happened next was shocking. Meta's stock ripped 90% year to date, marking one of the most remarkable turnarounds the tech space has ever seen. How did Meta bounce back so hard? Well, we can attribute Meta's earnings to its cost-cutting measures and improvements in its ad revenue. You see, following its decline in 2022, the company has been focused on improving profitability and has laid off a lot of its staff as a way to cut costs. All around, Meta has slashed its cost by a whopping $3 billion after a massive $5 billion reduction in February, demonstrating the company's persistent drive to adjust their balance sheet. Investors are thrilled with Zuckerberg's bold, cost-reducing plan. This daring move has paid off, as Meta's Q1 earnings smashed profit estimates by an impressive $500 million. In a dynamic response to TikTok's widely popular video service, Meta unleashed Instagram Reels, an innovative short video feature within the renowned photo and video app, mirroring the appeal of TikTok videos. Instagram Reels has taken the platform by storm, with users now spending a remarkable 24% more time engaged in the app. Reels have revolutionized the Instagram experience. Previously, users' feeds were dominated by posts from celebrities and friends they followed. Now, with Instagram Reels, users can unearth videos from people they don't follow, injecting a fresh dose of excitement and concentration. Small businesses are ecstatic about this feature as it supercharges their content marketing strategies. Zuckerberg also revealed that Meta has reached a jaw-dropping 3 billion daily users across all its platforms, making it an advertising powerhouse. This development could turbocharge Meta's ad revenue, which constitutes a substantial chunk of the company's income. Adding to the excitement, Zuckerberg hinted that AI may have contributed to the successful quarter, underscoring yet another reason for the company's standout performance. The Meta CEO, during the earnings report, excitedly stated that AI is driving fantastic results across its apps and businesses, citing it as one of the reasons for Q1's earnings success. But what does this mean for Meta's future? Although the full potential and profitability of the metaverse might be some distance away, Meta's remarkable recovery from its downtime showcases the stock's undeniable resilience. Various investors sold their stake in Meta when stock prices dipped, but with this striking comeback, they might just miss out on the stock's enormous potential. For those willing to wait, Meta's future could mean a colossal payday. During the Q1 report, Mark Zuckerberg passionately emphasized Meta's capabilities and achievements in AI. This is even more relevant now considering the groundbreaking impact of ChatGPT on the internet. Yet it's crucial to note that Meta's Reality Lab unit is still bleeding funds for augmented and virtual reality. Despite the success reported in the first quarter earnings, Meta still admits to losing $4 billion on this project in Q1. This loss is larger than analysts predicted and 30% higher than the previous year's first quarter. The company also expects to record further losses in this project later this year. Despite this, Zuckerberg says the company has an outstanding quarter and anticipates continued growth. Some analysts concur, highlighting that global macro conditions are improving year to date, and it appears the ad business is stabilizing or even recovering as companies adjust to the post-COVID market. Meta itself recorded a jaw-dropping 26% increase in ad impressions year over year in its apps, including Facebook, WhatsApp, and Instagram. The company is also eagerly exploring ways to monetize its messaging app and other services. To top it off, Meta announced a staggering 40 billion share repurchase program alongside its quarterly earnings. This follows the impressive 28 billion the company already bought back in 2022. Meta initially started repurchasing shares in 2017, but since it doubled its net income during the COVID era, the company has introduced buybacks exceeding $10 billion. Since Meta doesn't offer dividends to its shareholders, it may not be the best stock for those seeking passive income. But with this lean, mean business machine that Zuckerberg is building and future possibilities from its R&D department, a number of analysts give the stock a solid buy rating. Now, that's all for today, folks, but don't worry, we'll be back. If you've enjoyed this video, be sure to smash that like button, subscribe, and comment with some of your thoughts. As always, don't miss our next video. Thanks for sticking around, and we'll see you next time with more thrilling stock talk from the top source on YouTube for the most exciting stock market trends and investment opportunities across the internet.